CBA is predicting a 2021 housing boom. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, let's have a look at this article from news.com.au written by Jason Murphy. CBA predicts a 2021 Aussie house price boom of 8%. Now, just 8 months ago, you can see here, CBA predicts a 30% housing crash. And now we're looking at, no forced sales until September. Anyway, now we're looking at a housing boom in 2021. I am starting to suspect, the predictions of, or the modeling of a 40% crash from the RBA, the banks predicting up to a 30% crash, and all of these FOMO pieces that were put out by the media was done with intention to drive political will, to push our politicians or steer them or guide them towards the significant amount of intervention and stimulus spending that they've done to just drive into the economy. And where is a lot of it flowing? Well, housing. What's the lesson that children are told in Australia? When they go to bed, they're read a bedtime story about the property investor who bought a property, negative geared it, and then bought another and another. It's the story we're fed with as children. Where it's our culture, it's ingrained in Australian heritage. Build your wealth in housing, everyone. Or maybe people are just worried about all the uncertainties and want to get into housing to have something certain, something secure, and something solid. So let's have a look at what Jason has written here. So Commonwealth Bank reported its profits on Wednesday, and they made a cool $5 billion in the last 6 months alone. Revenues were around $12 billion, costs were a bit over $6 billion, and they paid $1.6 billion in tax, leaving around $5 billion for shareholders. Not bad going for a pandemic. Exactly. The really interesting thing in their financial reports, however, was not the news that banks make completely crazy amounts of profit. We knew that. Well, true. And that's why Aussies love the banks as their little dividend cows. We knew that. What was interesting was that they told us about the future. Commonwealth Bank forecasts what it thinks will happen in the future. It is forecasting an enormous boom in asset prices, house price growth of 8% this year, and stock price growth of 12%. It also expects unemployment to fall even as JobKeeper goes away. So they're sounding very confident for the future of the economy. But is that, the real value of the asset, or just a decrease in the value of our money, less purchasing power? We need to start measuring these, houses as next to other consumer goods. This is all just its main scenario, which they call the central scenario. That's the central scenario. There's also a downside scenario and an upside scenario, as you'd expect. But they are apparently also quietly bracing for the worst. As the bank revealed, it has also produced a severe downside scenario. I asked the bank for more details on that, and apparently it's too shocking for public consumption because they wouldn't send it to me. But even the simple downside scenario, well, wouldn't that be the RBA 40% prediction? That would be their downside scenario. But even the simple downside scenario makes for shocking reading. In it, unemployment goes up to 10.4%. Remember, these are based on ABS numbers. If we jump over to Roy Morgan unemployment estimates, they're a little different. Right now, we're sitting at, what's our unemployment rate? What is it? Here you go, about 6.6. Roy Morgan has got it closer to 12. You kind of double it. You double it to get the Roy Morgan numbers. I prefer these, not just because I'm a negative Nancy, guys, and stoic and always prepare for the worst, but their methodology is a little different. So here, January, they're saying unemployment and underemployment, because some people could be employed, but still not getting the work they want, which is, frankly, I think that's going to grow more than anything, is at 21.7%. So here, CBA, in their worst case scenario, they're predicting 10.4% unemployment. And that's the ABS number. So you've got to double that to get, roughly, rule of thumb, double that to get the real number. Disposable incomes fall by 3.8%. And house prices drop 15%. So that's still a long way from 8 months ago, they were predicting a 30% fall, everyone, in, this video here. Oh, we'll let that play. A 30% fall. I'll link to that previous video I did. This is back in May, guys. So 15%. I mean, is that from now or is that from later? I mean, we can jump over here. You can see, home prices will tumble 32% over a prolonged downturn period from the Commonwealth Bank. That's what they were warning back in May of 2020. Even their downside scenario is better than that. Remember, this is not their secret severe downside scenario. This is the one they were happy to release. Okay, so the secret severe one, what do you reckon? You think that'll be the 32% one? Because this is the problem. Everything is tied up into property. So if we start getting a drastic fall in properties, well, is there a risk of the banks needing to get government support or bail in? Honestly, I think the government will just simply inflate our money away to nothing before they allow that to happen. I see that as a greater risk. They can steal your purchasing power one way or another. So it's understandable why people want something in bricks and mortar, at least a house you can live in, or why they're going into precious metals, or why they're jumping into crypto, guys. Because people are worried. So what happens with the economy is very important to the Commonwealth Bank. It is Australia's biggest housing lender. Is everything sunny in the world of home loans? You might think so if you look at mortgage arrears. Those are the loans where people are behind on their payments, and mortgages in arrears are more likely to turn into mortgage defaults. But mortgage arrears are well down. Well, we've also got... Here's the thing. We're not in a natural state now. JobKeeper is not natural. That doesn't happen in recessions. It didn't happen in the last recession I remember as a kid. That was when we moved up to Queensland. We left Victoria and we migrated up to Queensland. We were those Mexicans that came for the warm weather up here. So, yeah, you've got the dole being increased, or New Start being increased. That's not normal, and that's going to fall back. You've got the ability for businesses to trade while insolvent, everyone. I know that's come to an end now, and we'll have to see the ramifications of that. We'll see that this quarter. I'm just getting emails from the ATO. I've got to do my activity statements. Taxes are starting to fall due soon. It's going to appear in March. And then, the 28 days, people are going to start chasing up those invoices that haven't been paid. How are you going in the comments, everyone? Let us know if you're getting paid or if some people are starting to get a bit sticky with the payments. Because that's the thing. When you're doing business with someone, you're providing them a line of credit when you're working before getting paid. I was talking to a doctor mate. He couldn't understand how it works in the construction industry. Why don't you get paid before? So here you've got it. Owner-occupiers and investment loans. So the investments are doing a bit worse than the owner-occupiers. But that's the thing. Oh, wow, they were doing worse. Interesting. Beforehand, you'd think owner-occupiers would be doing... Well, no. I guess they don't have the rent. Arrears appear to be down, but the banks don't count deferrals as arrears. Yes, you've got to remember that. All of the mortgage holidays are not counted in this. They changed the rules. APRA changed the rules so that they didn't have to count them, because then that would make it just look much worse. Remember how banks let their customers put loans on deferral. Commonwealth Bank still has $9 billion worth of loans, which aren't being paid back at all. That's a lot less than the peak in 2020 to be sure, but 9 billion is not a number to sneeze at, especially since almost half of them are in one geographic area. Victoria, which has had the worst of the pandemic, naturally has the highest number of mortgages still in deferral. The risk of loans going bad would seem to be worse in the southern state, which is still battling fresh outbreaks of the virus even now. Victoria's prospects for 2021 are clouded by what happens in the next few months. Another outbreak prior to widespread vaccination is possible. In 2020, outbreaks happened in Victoria during spring. It is easy to forget because of the big wave that followed, but Victoria had community transmission in March 2020. The spread of the virus does seem to depend on seasonal factors, and so as the weather cools in Melbourne, the risk of outbreaks is real, especially with the new, more highly transmittable variants on the loose. My understanding is it also has to do with the latitude, with the temperature of the areas. Delays in the vaccine mean Australia is slipping into a risky zone. The initial phase of the rollout were already going to be slow, with just 80,000 people a week getting vaccinated at the beginning. Delays in the arrival of vaccines mean it will be mid-spring before a sizable chunk of the population has had their jab. One more lockdown is not out of the question, and that would come at an economic cost. Well, all of these restrictions are economic costs. This is why historically experts were critical of these lockdowns as the economic and wider spread consequences of it weren't worth the potential benefit it could have. That was the case. And I've read through papers from esteemed leaders in these fields, people who've, kind of like eradicated polio, so it's not a joke. But that seems to have just fallen off the radar now. The problem is lockdowns are now just accepted. So imagine if a leader didn't implement a lockdown, particularly on the Labour side of politics, it will be brand damage because all the others have done it. So they just follow the herd. This is the risk that we have. If you go against the narrative, and then you're just destroyed in the media because of fear. We need to understand that, well, when you're planning your business and investments, you've got to understand that this is now probably just going to happen. I'm worried that it'll just become, a regular thing. It's great. Shutting down a city for one person, it seems ludicrous. If you had have suggested that just 2 years ago, 3 years ago, what would people have called you? Anyway, so that's just the virus risk. There's also risks around what happens to Australian consumers when the job seeker supplement expires and job seeker is removed. The Reserve Bank says it expects income to fall 3% and consumption to rise 14% in the year to June. Normally, if income falls, consumption rises. So we shall have to see what happens there. Over-optimism is, according to the World Bank, a classic symptom of the early phase of the recovery from a recession. Well, this is the problem. We don't have any experience in recovering from recession. I was in grade 2? I'm middle-aged now. I'm 40. Nearly. But there you go, How many people in the workforce don't remember the last recession? Let us know in the comments if you've got memories of it, if you had a business in the last recession, and if you're still running a business or working now, or if you've retired. A lot of people who were, running a business there, who were my age during that recession, they'd be retired now, or passed on. So our workforce memory, collective memory of recessions is gone. So, of course, Commonwealth Bank is not betting the whole bank on the central scenario coming true. The reason they have a downside scenario and a severe downside scenario is they want to be ready in case of disaster. Commonwealth Bank boss Matt Comyn was careful to point out that they hope for the best but prepare for the worst. That's true. That's why when people are going, you're looking at all this negative news, Florian, I can't take it. Guys, you've got to, take the stoic approach. Prepare for the worst, plan, be ready. But the problem is the people that can't hear it are the ones who haven't prepared. And sadly, I think that's a significant portion of our citizens in this country. Financial literacy doesn't exist. We see all of the articles from the ABC. There's never any criticism of the victim, because there's always a victim, for not taking responsibility for their own financial situation, for not even having an emergency fund. You're kind of punished. You pay all this money to the government, to institutions that you think will be there when you need it. And then you're punished if you prepare to save when you try and go for help. Yeah. So I can understand. I can see both sides of it. So we could withstand a much more significant economic deterioration than we are anticipating, he said on Wednesday. Still, he said, it would be very helpful for all those deferred mortgages if the economy kept going well. The remaining mortgages on deferral belong disproportionately to people who have really suffered in the pandemic, like people who work in travel or major events. This is the thing, everyone. This recession is different to others, as it's not being felt uniformly by people across the country yet. More so than in previous ones, I'd hazard a guess. Some industries are just going to be completely decimated, if not more. There'll be 5x decimated. Half of them will get destroyed. I'm just pulling numbers out of thin air, but well, we saw it with the number of people that, or the number of businesses that aren't going under, that aren't being the lack of external administration or personal insolvencies. We're about half of where we should be. So yeah, guys, 5x, another 50% increase. Or actually, no, that's doubling. It would be much easier for them to get the mortgage repayments back on track if the unemployment rate keeps dropping. Of course, some won't be able to get back on track and will have to sell their property. If they have to sell, it will be much better to sell into a rising market. It is easy to see why the Commonwealth Bank would want to believe in the central scenario, but as we know from 2020, life doesn't always turn out the way you want. And, well, Jason is painting I'd say quite sensible air of concern regarding the different scenarios that the Commonwealth Bank is proposing. And here's the thing, guys. 15% hit in house prices. Can you see it happening? People rushing in, buying in, and then if they take a 15% cut, it's not the end of the world if they can still meet the repayments. But, yeah, just don't go. The problem is people are going to take on too much. That's the scary thing. I mean, this generation is also behind previous ones, just with building wealth. And this is going to be a huge dent. I'd hate to be coming out of uni now. Poor guys. Anyway, let me know your thoughts and opinions on the comments down below. Do you think Jason's on the money? Do you think the CBA is on the money with their central scenario? Do you think we'll see an 8% boom in property prices? Or will it drop 15? Or will their good old 32% decline, will that materialize? As always, please like, share, subscribe to the channel. Let me know your thoughts and opinions in the comments down below. If you're a fan and enjoy the content, there are a few ways you can support us. You can join us on YouTube or Patreon. You can use any of the affiliate links you can find down below. You can buy merch from HeiseSays or Teespring, use Gold Pass, or from the Perth Mint, or support us via PayPal. You can join SelfWealth, where we each get 5 free share trades, or sign up to MeetRx, where we'll both get a free training session. Take care, have a great day. I'll see you all next time. Bye for now.